Good morning. It is Friday, December 15th. This is Option Pit Live. I am Mark Sebastian, the founder of OptionPit.com, and I am joined by one Licia J. Leslie, the queen of the candlesticks. Licia, good morning. Happy Friday.
Good morning. .com.
.com. That's my that's my Chicagoist accent I can have.
It was.
So welcome. It is a big day today because today is quadruple witching. Now, a lot of people have heard of quadruple witching, but not a lot of people really know what that means. And what it means is that we have four major pieces of options and futures contracts expiring all on the same day. So the biggest expiration is December futures. So the S&P December future is going the way of the dodo. It is going to evaporate this morning. Then you have S&P futures options expiring. So those are the options on the future. You have SPX index options and NQ NASDAQ 100 options expiring this morning. And then this afternoon, we have equity options expiring and ETF options expiring. So what this kind of account means is there is a ton of money coming off the table. Now, Licia, this can, there's a lot of like mystery and people always wonder, but what are your thoughts on the effects that quadruple witching can have on the market?
Quite honestly, I think a lot of that is overrated. I think that everyone is already hedged.
Yeah.
With other options, and they know exactly what their positions are, and they're ready for it. I mean, obviously, the in the money, out of the money changes as they occur before the close and all that happen for sure. But these big guys are already well hedged, and they know exactly 100%. What's going on. And trust me, they know their positions. They know what they want to be, where they want to be, and it's already. I think it's
a lot of talk and not a lot of business.
I believe that for sure.
Yeah. Now the one thing I'll say is that it does a lot of loose option contracts come off the tape and kind of disappear, and so that can kind of change levels that we might trade at in some ways, but in the very short term, it's not like it's gonna because it's quadruple witching, we're gonna have a sell off or a rally. That has been completely.
No, I don't think it affects market direction at all. Personally, I don't think it does.
No, it does affect some positioning, but that's really about it. One thing I was looking at is generally in 2 weeks we have the end of the year and the end of the quarter. JP Morgan has their huge quarterly hedge they do every year, every quarter. So what they do is they run a collar strategy. So they're long the market, they're long a put spread, and they're short a call. Do you know what call they're short?
Oh gosh.
It is.
Let me guess. I don't know. We're right there right now, aren't we?
No, the 45.15.
Really?
They are over $200 already. Their clients stopped making money $200 ago.
But I think that's also baloney too, Mark. There's no way that JP Morgan lost money on that.
No, the JP Morgan didn't lose money, but the strategy itself is just a collar strategy. You're long the market, short call, and long long put spread.
Right. But just because he was short that call doesn't mean he lost money. You know what I'm saying?
No, I get it.
He's long the market, so he's hedged. That's his hedge.
Yeah, it's a hedge.
He could be long more underlying than he was short those calls. And so the fact that everyone thinks we're going to close,
yeah. There's a lot of voodoo around. There's a lot of like perceived voodoo around a lot of these big market events.
Yes.
When in actuality, I don't think they have the same effect that a lot of people do. Again, it does free up capital disappear. That capital evaporates, and that can change some of the levels that we find for like support and resistance a little bit. But that's really about it.
There is one thing, though, I will say that will change the market, and everyone should remember this: the last day of the month or the last quarter, especially. Now, there is a such thing as window dressing. I agree with. A lot of times those days we get a little big, pretty good push into the end of that day.
Well, yeah, and the Santa Claus rally is going to be that week as well. Generally, the Santa Claus rally is the last week of the year. We've seen some of the biggest rallies that happen during that week. And, it looks like it's set up. I wouldn't be surprised if we're a little softer next week. And then we get just a face ripper into the end of the year. That would be classic rope-a-dope, a classic rope-a-dope move by the overall market. Speaking of rope-a-dopes, we need to avoid some of those rope-a-dopes. So, Licia, it's time for Licia on charts. So, Licia, can you take us through some of your charts and what you're watching?
Here's my SPX chart. SPY, I'm sorry. We looked at this last Friday, remember?
Mm-hmm.
I'm showing my SPY chart. Hint, hint. I only see us. Do you see my chart?
No. Are you sharing your screen?
Oh, shoot. That's why. I'm sorry. My fault. I'm telling everyone else here in the background, share my screen. My fault. I apologize. Here we go. Sorry, guys. Okay, I'm presenting now. Thank you. Sorry about that. Remember, we talked about this consolidation here last Friday and all those sessions that we couldn't bust out. As soon as we did, and we said the odds were we're going to continue in that same direction. And look at what a nice rally we've had. Now, SPY has followed my channel pretty well here, except for this bear trap right there. But my channel goes back to here.
All the way back to
October of 2022. Yeah. And now we're right at the resistance. This has offered some pretty good resistance back here. But it looks like today we may break through this resistance. 473. We're 472 right now. 473. And then above there, I'm saying 479, which lines up with our previous high back here, January of 22. That may be our target.
I would not be surprised if we did hit that level. It definitely, today feels like we might take a breather. It was interesting. Yesterday, actually all week, as good as things were for SPY, and I know you're going to look at the Qs here in a second. The bigger strength was in some of the other ETFs besides the Q and SPY. Leadership was not really coming out of SPY and QQQ, although QQQ definitely did have a nice week.
Yes, Qs, I have them trading right above my resistance there. They broke out of that resistance on the pitchfork. Now going back, according to the pitchfork, they can trade up here for 439.
Oh, wow.
And right now we're battling. We may have some resistance here from these previous highs back here in November of 21.
That was the all-time high.
Yeah.
So we're right up against the all-time high. That is going to present some resistance.
The exact is 408.71.
Wow. Yeah. That is, I think that definitely could create some serious resistance, which is part of and part of that is why we're seeing some of the strength in other areas. So, what had a great week was the Russell 2000.
It sure did. Finally, it has caught up. Now it is at its previous, most recent high of August. So that's where I have this resistance line here. Isn't it interesting? Look at my resistance are those previous highs, excuse me, back in February and July. It's amazing. Intraday, it traded above there, but it couldn't close above there. And now we're down a little bit. Everything else is up a bit. Pre-market,
pre-market IWM, pre-market, we're now down a little bit. We were up at the start of the show, and now S&P futures have gone from up about 7 to down about 4. And IWM is, Russell futures are down a little bit. They look like they're down about 0.5%. The NASDAQ 100 is still up 0.1%, but that looks like it's softening up as well. Like I said, today feels like a day where maybe we take a breather, especially
Yeah.
with all the expiring stuff. It definitely could be a little bit of a breather day. I think that's so we've kind of hit on the major indexes. Another area that's had a really nice week was crude oil.
Which we talked about last Friday.
We did, and you said it looks like it might be forming a base.
Yes, I did, and it did pull back. We were back here, and I talked about this nice little doji. Now remember, folks, when you're charting and you do have your supporting resistance levels, a lot of times it'll move away and keep going up or down, but a lot of times it'll move away and come back and revisit that level and kind of test you. The market is, as we all know, always testing, right? Always testing you, trying to shake you out of your position. It did come back and visit, and then we had a nice hammer. What was this Wednesday with confirmation, and now today we're trading higher. I think crude's going to trade higher.
Yeah, I mean, seasonally it should, right? I mean, this is a period where demand starts to for heating oil and things like that starts to go up.
We also have
Nat gas and crude have just been absolutely thwacked. Interest rates pulling back is also going to be helpful to that. And now let's look at Bitcoin, and we're going to talk about Bitcoin a little bit more in a second. But
I would like to say something real quick.
Sure, yeah.
Excuse me.
Yeah, no.
Also, with crude, we have the MACD turning positive, crossing over. And another thing, when you're looking at RSI, now RSI, remember the 30-70, right? 30 below 30s oversold, above 70s overbought.
What is RSI, if you don't mind me
Relative
asking?
Strength Index.
Okay, so relative strength index. So
now,
if the relative strength is below 30,
it's oversold.
Oversold. Okay.
So oversold, and you're looking for it to maybe bottom out there. And over 70. Some people use 20-80, but 30-70 is the general rule of thumb. And over 70 is oversold. So you're looking for it to overbought. Overbought, and you're looking for it to come down. Now, more importantly, though, besides the 70-30, when you see RSI, here we have a low and then a higher low. But here in the chart, we have a low and then a lower low. There's a divergence there, and that is bullish. When RSI is turning bullish and your chart is still continuing bearish, but RSI isn't going lower, that's showing that you're bottoming. And same thing on the opposite. So
you want to match a higher low in RSI with a lower low in crude. And now you've got a chart that you can do something with, is what you're telling me.
Exactly. That is showing you bullishness for sure.
I like that. Yeah. So going long crude makes some sense. And well, that would make sense. I mean, XLE had been looking just abysmal until yesterday, really.
And we had it's at the bottom of my chart, which is pretty cool. Now I have a little resistance here, but which is this consolidation here. I'm thinking XLE to 88.74.
Okay.
Look at the nice volume yesterday. MACD's turned positive. I like XLE. And what was the other one I was going to look at?
China.
Yes. No, there was another crude stock. Sorry. I'll think of it.
XOP?
No. But that is a good one.
Okay.
Sorry, I'm going to peek here. USO.
Oh, yeah.
Sorry. I didn't mean to share my notes behind the scenes here.
It's all right.
The secret sauce.
I know.
Yeah.
Behind the curtain, folks.
All right. USO, look at how far these stocks have come down.
Yeah.
It's bounced from the bottom. This has a lot of room to run higher. A lot of room to run higher. Hasn't quite turned up in MACD yet. Same idea though. Look at the RSI, a low and then a higher low when the chart was a low and a lower low. So USO, I believe XLE has the same thing. I would go along those.
So we do have a question
Yes,
from.
same
We have a
idea.
couple of good questions here.
Oh, good.
Licia, do you subscribe to divergence in RSI and price action as a component of your setups?
Yes, absolutely. When I see it, it's besides being a, like I say, besides being the high and low, overbought, oversold, this is very important. This is what you're looking for with your RSI. This is more important to me, more of a bullish or bearish signal than being overbought and oversold. Because as we've seen, you can stay
You can
over
stay
70
overbought or
and go on
oversold
to
for a very
80
long
and,
time.
yes, exactly.
Sears has been oversold for a very long time. Think about it that way.
Right.
Right, because they're out of business.
What'd you say? What has been?
I said Sears has been oversold for, because they're out of
You're
business.
right.
You know, Webolts, there's another one that's oversold.
Oh my gosh.
Woolworth,
Oh my gosh.
Montgomery Ward, they're all oversold.
I remember as a kid going into Woolworth and buying my mom like bath balls for Christmas at Woolworth. So yes, that to me is more of a indicator, a pretty really good indicator is what I want to say. A pretty really good one.
All right. All right. Now we got I do want to hit on Bitcoin, but we'll come back to, we're going to hit Bitcoin, I think, in our next segment, because I want to talk about a couple of things around that. But let's end on China.
And China, as we know, has been pounded also.
Yeah.
FXI. Now I don't have support on my pitchforks here, but we're breaking out of this consolidation here to the upside. Yesterday actually had a nice hammer. Now a hammer, you wanted to take out the previous lows, which it did intraday, and close near the top or the high of the day, which it did. That's a nice hammer. The Bulls beat out the Bears in that session yesterday. And now we have confirmation going higher. I think FXI can trade to 24.86 from here, 25, and then up here. It has a lot of room to run, which takes me to Alibaba. MACD is starting to turn positive, and your RSI is bouncing. I am considering Alibaba today.
Oh, wow.
Yes.
That's something I haven't heard in a long time.
I know.
Baba's been hot garbage for, a good year.
We're already up $1.50. I should have bought them yesterday. Huh. Same idea. Breaking out of this, forming a little V bottom here.
Mm-hmm.
I like Baba for today, and I think that Baba will trade back up here, 79 almost. That's a pretty good run.
All right. So you're liking Alibaba. We're gonna hit. We'll chat about that a little more maybe, but let's hit on some of the big stories. And I think kind of the under the radar story is the NVIDIA challenge, right? NVIDIA, one of the 5 biggest companies in the world now, right? It's a $1 trillion market cap, something like that. Giant PE. And why? Because the AI chip. In the last 2 weeks, we've seen AMD come out and say they're developing a chip that's going to challenge them. And now last night we had Intel come out and say, we're coming out with something to go after AMD and NVIDIA as well. And, obviously it's going to take them a little bit to have everything put together. But this has to represent a serious challenge, and also some common sense. When one company is making so much money,
right? I was just going to say that. Go ahead. Well, aren't we expecting it? Aren't we expecting them to all? That's their business, right? Their sector. They're fools if they don't.
Yeah, I mean, why do Chevy, Dodge, and Ford all make pickup trucks?
Because they sell.
Because the one they sell, and two, the margin. And so I think this has to be considered something bearish for NVIDIA in the long term. Now, they're going to be fine. They're going to make a lot of money. But you look at the price earnings ratio that's priced into that thing. If they start getting some serious challenges from Intel, who has really entrenched relationships, and AMD, who also have entrenched relationships, I think that you have to wonder where, whether NVIDIA is properly priced. And so that one thing I've been looking at as a trade, because I really do love chips, is long SMH.
I
But
was just
then,
looking at SMH.
oh yeah, what are you seeing? What are you seeing in SMH here?
I have, it is almost quite to the top of my, it is one,
Let's share her screen.
share my screen, I'm sorry. I have a little resistance here, but it looks like it's going to break through there, 173.40. But to complete the pitchfork, you're looking at 186 up here.
Oh wow.
Yeah.
Well, so what I would do is I would buy SMH, and then I would hedge the downside buying puts in NVIDIA. This is something
NVIDIA has lost some steam here compared to the others.
Yeah, this is something I'm going to be executing in a service we have called Nitro Trader, where I trade pairs off of each other, and so I will be likely buying calls in SMH and puts in NVIDIA as a pair in the next couple of days, because NVIDIA looks a little weak. I don't know if it can break. I don't know if it can get all the way down to its. I don't know if it can get all the way down to its 200.
There'll be
But
support here at 453.
it's sitting right above the 21-day moving average. The 50-day is at 459. And then the 200 is all the way down at 393. I don't think it's getting to the 200. But I do think it's I do think NVIDIA is set up for, to maybe pull back a little bit here, which actually, and not just NVIDIA, the mega caps as a whole. Look at MGK, folks. If you want to know what's going on with the mega caps, MGK. Now there's 70 stocks in here, but it's almost exclusively Apple, Amazon, Microsoft, Meta, Tesla, and NVIDIA. And what we saw yesterday was MGK on a day where, even at where, the S&P closed up 12 points, 0.25%, and the NDX was red. The equal weight, and I'm going to talk a little bit more about this in a second, but the equal weighted ETFs and indexes, and IWM and the mid caps all outperformed the market cap weighted indexes. So what is the difference between equal weight and a regular S&P? So there are 11 sectors that make up the S&P 500. They are, energy, technology, communications, consumer staples, consumer discretionary, utilities, communications, medical, and there's retail, and there's one or two more, but 10 out of 11 ain't bad. So with the equal weighted ETF, every quarter they rebalance the portfolio so that they own an equal dollar amount of each ETF. So the individual ETFs are still cap weighted, but so the XLE is basically two stocks, right? It's CVX and XOM. So you're still more weighted toward the big stocks. But from a sector standpoint, at the beginning of on January 2nd, if I have $1 million in an equal weighted ETF, then they take that $1 million, they slice it up 11 ways and distribute that across the 11 ETFs. Then they allow that portfolio to run, and they rebalance at the end of the quarter. So what's nice is that you end up selling your winners and buying your losers every quarter. And this market has been so winner heavy in just 2 sectors over the last year that it's nice to see the rest of the ETFs catch up. There are only 2 ETFs of the 11 that are beating the performance of the S&P 500. 2.
Wow.
Anybody know what 2 sectors those are? Anybody in the audience know what those 2 sectors are?
I think they can guess.
They can probably get the one. They might not get the other.
Right.
All right. So now, if we're seeing this rotation, right, the same kind of performance we saw out of IWM, right, which has just been blowing higher, and MDY, which is a lot of people don't know MDY, right? Everyone knows the Russell 2000. Nobody knows the MDY. It's the next 400 stocks after the S&P 500.
Mid cap.
Mm-hmm. Dog is crying. It is the next 400 stocks that had a big breakout day. One of the reasons why it is going to break out is because it holds all the mid cap banking names like Fifth Third Bank and Comerica. And that is a sector where I think there's a lot of room for the market to run. So, that's been, I think, a big story. The next thing, and I'm going to hit on how I want to play this here in a second. All right. But the next story I want to hit on is Bitcoin.
Okay.
Because Gensler, what were you going to say?
MDY, look at your chart. You busted through this double top,
nice.
Triple top almost. But yeah, this is very bullish. MDY.
I bought the March. What did I buy yesterday? I bought the January 5-10 call for $8 yesterday.
Doesn't look like it trades a ton.
It doesn't.
I'm surprised with that kind of move. You'd think there'd be more interest in here.
Yeah, like I said, everyone talks about the Russell 2000. Everyone talks about the S&P. Nobody talks about the mid caps. I guess they're boring. They're the well-adjusted middle child.
The markets are wide though.
Yeah, they are. So that I feel comfortable playing in those markets because I know how to value an option. But if you don't, then I think the Russell 2000 is the other one that's going to perform with MDY. But I wanted to talk Bitcoin because Gensler, despite court orders and everything, he's still fighting approving an ETF. He absolutely is anti-crypto and came out again just calling it the Wild West and saying it's all scams and everything like that. Absolutely will not approve or is fighting. He's going to do everything he can to not approve an ETF. That's my take.
I just feel like he hasn't gotten in yet, and that's why he says that. All right.
Yeah, what he should do is buy Bitcoin and then say, I changed my mind. I'm going to approve the Bitcoin ETF.
Exactly.
That'd be classic government move. 1 second.
Right. Or Goldman Sachs. I'm still saying bullish Bitcoin. It has had a pullback. I did call for this consolidation to take another leg higher. It did not. It took a leg lower. Held my support very well, though. Closed above my support line there. Little resistance here. I think it's going back. 44,860.
All right.
Although if you see a close below here, 41.5, then it could trade back down here to 39,000.
All right. So, now that we've kind of hit on kind of the major stories I wanted to hit on, I want to talk about some trades that we like. And my trade this week, I've already made mention multiple times, and I brought this up on my Big Money Flow segment last week, and that is Truist Financial, TFC. This is one of my favorite stocks. I already closed a long call position yesterday, and then I reopened, and then I rolled higher and reopened into a new position.
Very nice move.
Yeah, if you look at the mid-cap banks, I'm going to expand this. Truist Financial was $46 before that March meltdown. And really, they had started to sell off prior. This thing peaked out in February at over $50. It's currently $37. The 10-year is below 4%. That is going to allow these banks to have a relatively stable book. All right. So their investment holdings, those are actually starting to make them money again, right? They got really stretched as bonds sold off. Now that they've come back down, their investment holdings are going to be good, and then lower rates are going to spark some demand. There's a sweet spot for interest rates, and it's not 2.75% like I got on my house, but it's not 8% either, right? How's a bank going to make money loaning money out at 2.5% on a 30-year mortgage? They're not. All right. But, the 30-year, the 10-year at 3.9%, mortgage at 5.5%, that's a level banks can do all right. And people, that's still a historically relatively low rate, right? 5.5%. That was cheaper than my first mortgage in 2006. Anyway, so TFC, despite the move that it's had, I don't think we've missed the boat.
No.
I think it's going to 40. It's going to go to 40, maybe 39, and then from there 45, and then from there 50. I like this one moving higher. We've seen a lot of bullish action. I am long, and I bought these yesterday. I paid less than they're currently trading, but I think there's still upside. Otherwise, I wouldn't bring this up. I am long the March $40 call. They're going to be, this thing's down about a quarter. These are going to cost you about $1.15. I think that they will more than double in the next few weeks. So I am a buyer of the March 40 call. I paid $1. I'll just tell you, I paid $1. But I think that at 130-ish, you'll get an opportunity to, if I paid 130, I will get an opportunity to sell these at $2.60, maybe $3. That's how bullish I am these mid-cap banks right here. Because rates coming down, they're the winner in that trade. They're the winner.
If you zoom out on your chart on TFC, you can see how previously to the drop, that's like a sloppy rounded bottom you have going on down there after that gap lower. And now you're to the point where you filled that gap. You're going to hop back into that where it used to trade.
Yeah. So
I'm with you. I agree. I have like 48.75 for sure.
Yeah, this is one of my. Now, KRE is the mid cap bank index. It does hold some banks I don't love, but a portfolio, if you want mid cap exposure, long, Fifth Third, and Comerica, and TFC. That's a nice little trio of stocks that make a lot of sense to me. Licia, what stock do you have that you wanted to potentially go long or short today?
Well, I'm going to go back to the two I was talking about, China and crude.
Okay.
So I would like XLE. It just closed. I'll show you on my chart here. It just closed yesterday above the 200-day. Now you have the 50-day just above here, 85.70. That's going to be 85.60 is going to be a little resistance. And on the weekly, you have a little resistance on the 50-day. But I'm thinking it's going to trade out of this range and trade higher. 89. I think it can go to 89.
Oh, wow.
USO is another option. I think it can go to 69.90 up to its 200-day there. By looking at the crude futures, which we have, I think these two will trade higher. And as I said, I like BABA. I was looking at the GN19 calls in BABA. It's 73.90 right now pre-market. But look at our
I
50-day
mean, look
does
at
are
how
coming to like
terrible that.
80.
I mean,
That
this is one of
downtrend,
those.
yeah.
It's like a reclamation project, right? You'd almost rather buy it on its way up than trying to pick a bottom, right? Because trying to pick bottoms here in BABA has been nothing but sadness.
Well, I'm thinking it's bottoming here. The major resistance here is 78.76. You can see it going across here.
Okay.
And you can use it going long here. You use these lows as your stop loss. 70.60.
Okay. I like that. Next week we got to do a little demo on how pitchforks work because
Oh, sure.
people resistance is you talk about support and resistance so much. It's really important. But what creates those levels and where do we pull those from? That is really important, and we're gonna make sure you tune in next week. Licia's gonna give us a little chartication.
It's amazing.
Right.
It's more of a, believe it or not, it's more of an art than a science with the pitchforks. You'll
Yeah.
be surprised. But yeah, we'll talk about it for sure.
All right. Absolutely. All right. Now, so Licia loves her charts. I love Licia's charts. And the other thing I love is order flow. And order flow is so important. When big money steps in and buys a lot of options, they're usually not wrong. Look at what's happened in the last few weeks. We've had huge buyers of Macy's calls. Oh, what do you know? They're being bought. And right before that, you've
Easy.
had big JWN. U.S. Steel started trading before that they announced that merger. It's or their potential merger. Big money is usually not wrong if you can break down to stuff that is straight, a straight up trade. All right. Now I'll explain this over the next few weeks. I actually have an ebook that I wrote called that describes how to separate big money from stuff that's hedged. The actionable order flow that you can trade off of versus stuff that's hedged or hard to understand. But I made reference to the fact that this week the bottom 490 stocks in the S&P 500 are outperforming the top 10. So the MGK has actually underperformed the mega cap names. And so I want to show you the order flow that we saw. So let's look at my screen real quick. Yesterday, with RSP, which is the equal weighted ETF, and we already talked about this, we saw a massive call buyer. Now it was tied to stock, but it's still super bullish the way this one was set up. They bought, and because RSP just doesn't really trade that many options, it's not a super active contract. So the fact that they were buying this kind of size, 63,000, 20,000, 4,000, 3,400, 3,000, blah. I mean, this type of size, they were not messing around in RSP.
What month?
They are 1 month out. They're buying the Jan 160 call. January 160 call. RSP is currently trading about 157.24. Now, what they're telling us is twofold. One, they think the market is going to go up. Two, they think the bottom 490 are going to be the big winners into the end of the year. Because remember, this thing rebalances in March, or excuse me, in January. So when this thing rebalances, all that outperformance on the bottom end, you lose a little bit of that. But what they're telling us is that the bottom 490 are going to outperform the top 10. And so a name like RSP is going to be the place to invest. So here was the trade that I put together. And I thought this was kind of interesting. I'm going to show you this. Don't want the SPX in there. So what I put together was it looks like a strangle. All right. It looks like a strangle. But what I have is I have 3 of the 160 calls for January in RSP. And then I bought a 470 put in SPY. So so what I'm doing is actually arbing out the alpha. I'm actually just creating a trade where I'm looking for the alpha of the equal weighted index to outperform the cap weighted version, which is SPY. Now, if the market goes to hell in a handbasket, I've got my SPY put. But what I'm really looking for is that outperformance out of RSP. If we get a rally in the equal weight that exceeds that of SPY, my trade's going to make me some money. And that was how I traded off of that order flow.
What was your ratio?
1-3. So RSP is about $160. The S&P is 470. It's a pretty easy math to come up with that, right? That's just about the exact same level. So about 3 of the January 160 calls, and I bought 1 January 470 put in SPY. And speaking of SPY, I spy that it's 8:14, and
Ooh.
we are almost out of time. Licia, what are you watching for today in terms of, how do you know what's going to let you know when we have a clear direction, right? Are we? So this morning we've been up 10, down 4, and now we're up 3. What are your thoughts on how we trade today?
My general rule of thumb is when I have some trade ideas, I like to let the market shake out for at least an hour in the morning. Now, unless you're exiting a trade and it's your way, sometimes your best price is right there at the opening, right?
Right.
Get out. Entering a trade, though, I like to watch the market shake out the first hour, and then you can generally at least an hour and a half to get some idea of where we may go. That doesn't mean we can't do both up and down within the day, right? But I don't know. I think yesterday was kind of a doji on SPY and SPX and everything. So we need more evidence if it's going to roll lower. A doji can show a change in trend, or we can get some spinning tops and get a little, like you say, a little more consolidation and a pause.
Yeah.
Before we take, because we've had a really nice rally.
Yeah, I think that my gut says that we're gonna see this expiration happen on the open. I do think that we're probably gonna be a little bit softer by the end of the day, or at least midday. I think we'll be softer. Like, I think we're gonna get a dip below 4,700 again today. I don't know if it holds, but I think we're gonna get a little dip below 4,700. Futures are right around 47.7850. So 47 shocker. We ran a 47.75 and bounced. Folks, zeros, 25s, 50s, and 75s. It's a mental thing, but those are the levels futures bounce off of. So that's what I'm looking for. I think that the one thing everybody should be watching, if you're not watching these already, is bonds. If you don't have the 10-year note or TLT or IEF on your tickers, bonds have been the leader. Keep an eye on the bond market. If the bond market has a sell off, we will sell off. But right now, like I said, going to be an inside day, but I think we'll pause a little bit. All right, it is 8:17. We're a little bit long. Licia, thanks so much for hosting with me today. Always a pleasure.
Thank you.
All right, so for Licia J. Leslie, the Queen of the Candles, I am Mark Sebastian, your only option. I hope you have a wonderful trading day and a fabulous weekend.
TGIF.